Jaw and a deflation war. That's what's in store in Europe next week, and Sarah is here to discuss all of that with us. Sarah, the IMF meetings are ongoing in Washington this weekend, and there's some important policymakers speaking. What are you looking out for?
Well, yes, it's like the whole A-list of policymakers will be the Yellen, Whiteman, Draghi, Constantio, so a lot of the ECB policymakers as well. And inflation or the risk of deflation will probably be really high on the agenda here. And it's always interesting to see what the IMF says about inflation in the Eurozone.
Yes.
And also really interesting to see how Draghi responds to that.
Yeah, because the IMF's quite worried about it.
Exactly.
Aren't they? Yes.
And at the last press conference, Draghi said something like the IMF has been extremely generous in offering help on how to tackle the inflation problem.
A little bit of a sarcastic statement that was, wasn't it?
Exactly.
Nevertheless, it's going to be pretty interesting to see what Draghi himself says about inflation, because it's at pretty low levels in Europe right now.
Yeah, the flash estimate for March was 0.5%, and the confirmation of that comes out next week.
Do you expect it to change? Or?
No, we expect it at the 0.5% level, which is actually a 4-year low. So this is extremely low.
Right.
But so the ECB has sort of opened up the door for QE. It says it's been discussed at the latest meeting. So everyone will be looking for this data if it could trigger a QE or maybe a rate cut in the coming months.
Yeah, that's the thing now, isn't it?
Yeah.
Do they have to resort to some kind of unconventional policy?
Yeah, but just one more point about this. Draghi, he's still so calm about things. He keeps saying that this sort of button out now, and the March data may have been affected by the Easter, which is in April this year. So we could see the April data rise, not sharply, but definitely come up higher than the 0.5%.
Right, so he thinks March is a bit of a one-off and that things will be back to normal or normal-ish in April.
Well, we've said that
we'll
before.
See. Meanwhile, also, we'll get inflation data for the UK next week, won't we?
Yeah, and we're talking completely different levels here. It came in at 0.7% last time, but now we're expecting 1.5%.
Right.
So it's still below the Bank of England's 2% target. So it's probably not, the Bank of England is not going to be in any rush to tighten policy at this point if we're looking at inflation data.
Sure. It's coming down though, isn't it? 1.5%. So is there the same kind of deflation worries starting in the UK at all?
Well, yeah, one of the reasons that inflation is coming down is because of gas prices, food cost and airfare. So it's not, it's more one-off than it's actually like because we aren't spending as much anymore. Yeah.
Okay. We'll also have unemployment data from the UK next week, and that's important, isn't it, for the way the Bank of England thinks about things?
Exactly, yeah. They talked about the 7% threshold for a long time, and the unemployment rate actually rose to 7.2%, but we expect it to fall down to 7.1 maybe.
Right.
Interesting here, if it falls to 7%, it will activate the new fuzzy guidance from the Bank of England. So we won't look at the threshold anymore. We're looking at average earnings, productivity, lots of other things. So when we get the employment data next week, we should also look at average earnings, because that's definitely something the Bank of England will be looking at.
Okay. It's quite unclear, isn't it? Fuzzy guidance, unemployment levels.
Yeah.
This is the new wave of central bank policy.
Exactly.
Okay.
But we don't expect any rate hikes in the UK over the next 12 months or so. That's what I hear anyway.
Okay, that's really the macro and economic story next week. We'll also be looking out on the corporate front, I think, for Tesco's results. Company that's under a bit of pressure, actually. Supermarket chains been losing market share, and the CFO just resigned. So.
Yeah, and it's the full year results that come out, and analysts expect a bit of a drop from last year.
Okay, great stuff. Thanks very much, Sarah.